challenges that some of the earlier speakers had, and I'm going to rely on old technology, which is basically me talking to you. I'd like to begin by welcoming Your Excellencies, the honored dignitaries, ladies and gentlemen of the audience. And I'd also like to begin by thanking the sponsors. Some of you know that I put on my own conference every year in Vancouver, an exercise that is analogous to herding cats. The Terrapin organization has had to bring delegates, attendees, speakers. They've had to fly us here, they've had to put us up, they've had to feed us. If you could, right now, join me in a round of applause for the employees of Terrapin and the people putting on this fine conference. The one thing they did wrong is assign me an impossibly broad target, an overview of commodities and markets. So what I'm going to do is something very different. I'm going to talk about some of the large picture opportunities and some of the large picture challenges that Sprott is either eager to take advantage of or afraid of being victimized by. If there's something that is of interest or that I haven't covered, there will be, I hope, ample time in questions and answers, or in a round table this afternoon, or in a panel this afternoon. So as I say, the topic is impossibly broad, so let's get started, and let's get started now. It's interesting in a conference like this, and in any discussion around commodities and mining, to listen to the questions in terms of the audience's perspective. I had a couple questions this morning about the recent increase in the price of gold from sort of $1,200 US to $1,205 US. I guess it matters to someone, but to whom? And when people put the question of commodity prices and commodities markets to a group like this, I think it's very important that we look at a much broader perspective. The truth is, when we look at the copper price in tons over 2 weeks or 3 weeks, we do ourselves a disservice. We do ourselves a disservice for many reasons, but the principal one is, if you're going to be in this business, you're going to be in it for a decade. And if you think in the context of a week or 2 weeks or a month, you do yourself and you do the industry a disservice. I had the good fortune yesterday morning, to drive from this center down to Abu Dhabi to visit with some colleagues. And I was thinking in the car about this speech. In fact, in fairness, I wrote this speech in the car. And as I was going down, looking at the growth that's occurred in the Gulf region, in this region in particular, since my first visit in 1998, and as I looked at the escalating growth, the cranes on both sides of the road, the construction equipment, the traffic jams on roads that when I first came here weren't roads at all, I asked myself, who could examine the scene that I drove through and not been bullish on the future of mining? Do you think that those roads get built by bits? In fact, everything tangible in the world, we all know this, but we forget it. Everything tangible in the world was either grown or mined. So when you're thinking about commodities, I would urge you to think about commodities in that context. And I'm going to talk about 3 or 4, in fact, I'm going to talk about 5 facets of the commodities business this morning before I move into financial markets. 5 sort of subjects that I think are of interest. 2 of them are positive, 3 of them are negative, but I don't want you to come away from this being negative. I'm quite positive. It's just my job to show you both sides of the picture. The most important, and the one I talked about in the context of my drive from Dubai to Abu Dhabi, is very simple. It's the ascent of man. The truth is that everything material that we consume is, as I say, either grown or mined. In my lifetime, admittedly by now that's a long time, the population on Earth has doubled, and the rate of population increase is growing. And in addition to that, the demographics at the bottom of the economic pyramid get better and better and better. 2 billion people in the world live lives that are substantially less rich than the lives of those of us who are in the room. But all of those people aspire to better lives. Again, driving around the Emirates, seeing several million guest workers from South Asia, you get the sense of the ascent of man. You get the sense that people who have less than us want what we have. And mercifully, in the last 30 years, they have begun to acquire it. Reading in the car yesterday, I learned that 30 years ago, the largest public health challenge in Malawi, as an example, was starvation 30 years ago. The largest public health challenge in Malawi today is obesity. That may not be a good thing, but it certainly points to the ascent of man. 2 billion people at the bottom of the economic pyramid wanting to live like you and I live, and increasingly having the ability to do it. What's important about that, ladies and gentlemen, is when people like those people in the room, in this room, get more money, what do we spend it on? We spend it on services, not stuff. The truth is, all of us ignore it, but we already have too much stuff. Our lives would be richer, in fact, if we had less stuff. But for the people on the bottom of the economic pyramid, when they get more money, they want to feed their families better. They might upgrade their housing accommodation from having a thatched roof to having a steel roof. They might upgrade from walking to a bicycle, to a 50cc motorcycle, to a Toyota Hilux. This is the reason why none of us, in the next 5 years, the next 10 years, the next 15 years, the next 20 years, can be bullish about the commodity prices. But there's another reason to be bullish too. This one might be somewhat more pernicious. Those of you who have existed in the mining business for the last 10 years know that the business isn't always milk and honey. We have been through our very own private depression in the last 5 years or 10 years. And I want to say to you, not perversely, this is a blessing. This is a blessing, and it's a blessing for all of us looking forward. It's a blessing because the cure for low prices is low prices. The cure for high prices is high prices. Play the clock back 3 years ago, 4 years ago, to something that this region follows very closely, the price of oil. I remember 4 years ago, the price of oil was about $45 US a barrel. And the big thinkers of the world, the Economist magazine, all these kind of people, were talking about the end of oil. And I remember people asking me in conferences what my outlook for oil was. And the response was fairly simple. The International Energy Agency at the time said that the fully loaded cost to produce a barrel of oil, fully loaded, that includes cost of capital, it includes prior year write-downs. The fully loaded cost around the world to produce a barrel of oil was estimated to be $60 US. So the industry was making oil for 60 and they were selling it for 45. They were losing $15 a barrel and doing that almost 100 million times a day. Not surprisingly, that got fairly boring. Very unpleasant, in fact. And many oil companies, private and national, around the world, ceased making sustaining capital investments. They ceased exploring. Why would you look to produce more of something that you were losing $15 a barrel on? The truth is, in commodity prices, you balance supply and demand by one of two methods. Demand creation, which happens during periods of low prices, or more importantly, supply destruction. And it appeared to me 3 years ago that all I needed to say to the audience was, if you believe 5 years from now or 6 years from now that your car will start when you turn the key to the right, you have to believe in higher oil, because nobody can produce for an indefinite period of time below the cost of production. What happened? Well, of course, the oil price went up. And so I would suggest to you that in addition to the ascent of man, the truth is that the depression that we've seen in commodity prices in the last 5, 6, 7, or 10 years is in fact bullish for the commodity business, because it has restricted new production, It has constrained existing production, and in certain circumstances, it has destroyed productive capacity. That's important because when supply and demand balances and the prices move up, the industry can't move to add additional supply for very long times. We all know that mining is time intensive and capital intensive. And I think the combination of the ascent of man and supply destruction is extremely bullish for basic commodity prices in the 5 to 10 year time frame. Notice I make no forecast at all with regards to 2018. Let's move on to some of the negatives, however. Let's move on to some of the things that we have to consider in the context of what I think is a bullish scenario. First of all, the world has been in a sustained, if spotty, economic recovery